Alright guys, so I'm just going to break down the strategy for you, break down the concept so you can understand it and conceptualize it, and then after that we'll start going into the actual charts. But before we do that, I thought it'd be good for you just to see a textbook example of how it works. Obviously it doesn't always look exactly like this on the chart, there's going to be variations of it, but I want you to understand the concept and why we're taking the trades. So this is an example of a bullish setup. So we're looking for a short, but I mean this is the market is in a bull trend. We have a sharp move. We have a shallow retracement of 38.2 as a maximum. This strategy only works when it's 38.2 as a maximum. It can spike the level a little bit, but we're looking for somewhere between 38.2 and 30.9, as I'll show you on a chart shortly. So essentially, we want to see strength come into the market. We want to see almost too much strength, or a strong leg which ideally breaks some structure over here. Maybe there's a structural high here and we break that. Then we have a 38.2 shallow retracement and then an extension of at least 12.72%. There is a reason for that level and I will go into that later on, but this is essentially where we look to enter. We have our stop up here above our next level, which I'll show on a chart later. We're looking either to target the 38.2 or the 50% fib of this impulse. Statistically speaking, this is probably the best place to put your take profit because it's the most high probability, and it accounts for those different kinds of corrections. So sometimes you get a correction that doesn't take the low out, but more often than not it does take the low out, but this will sort of give you the high probability of getting paid out, and often this does end up being the actual reversal pattern. And there's some guidelines on risk, depending on what kind of account you're trading. If you're trading a funded account, maybe 0.3%, it's quite reasonable. If you've got a higher risk account in your portfolio of accounts, maybe you've got a $5,000 account where you risk 5% a trade, something like that, this can also work, because this is a high probability setup that in my experience works the majority of the time. Obviously with any strategy it can lose, but it has a high success rate for me. The key thing is the only subjective part of this strategy. So this is a mechanical strategy in the sense that every time you have some specific criteria based on numbers for your entry, for your stop, and for the pattern itself. The only discretionary part of the trade is the initial leg. So this, as I'll go into in the charts, has to be a specific way. If this is just made up of small candles all the way up to here, then you don't want to be. This trade's not valid. It needs to be some kind of strength. It needs to be kind of fast, sharp. Price action needs to be right, basically. Otherwise, it's not going to work. It's going to be a sign of like real steady strength. What we're essentially doing is waiting for these overextensions where the market is weak, or the market is susceptible to a collapse. And normally, this leg is always very quick. This D leg here, it's normally a very fast move, so you normally get paid quite quickly. You do sometimes get some waves on the way down, but generally speaking, this will pay out quite fast. So we want to take advantage of that. As I touched on, this can be used on any time frame. So the market is fractal. If you don't know what fractal means, it essentially means that each time frame is its own unique universe in the way that I understand it. Each time frame operates its own set of rules. It operates in its own world. Like, there are fundamental things about the market in terms of looking at technicals and looking at order flow and price action, which work on each time frame. Like, they all follow the same laws. Like, you'll see it on any time frame. For example, with a break and retest, you could look on that in a 1 minute and you can find a setup for that break of a resistance and then a retest and then continue lower, or break of support and then retest and then continuation. Those kind of things work on any strategy. You could do it on a 1 minute, you could do it on a weekly chart. It's the same with this, that you can find this setup on any chart as long as it fits all the criteria. And each time frame is its own unique world. So you could have a strategy. You could have this setup could be happening on a weekly chart, and at the same time be happening on a 5 minute chart. And you could basically take two trades. I'm not saying you should do that. I'm just saying as an example how each time frame is its own unique thing. And this concept was sort of a game changing for me when I found that out. There's different thoughts out there about whether you should trade just one time frame or you should do the multi time frame analysis. I've done both. throughout my trading career, whether that's I've done the multi-time frame thing where you're looking at daily, 4 hour, 1 hour, then executing. That works with those kind of discretionary strategies. Or I've had other mentors that have said to me, don't just trade on one time frame. But I think what it really comes down to is your own circumstance, your time that you have for trading. If you're sitting in front of the screen all day, then you could just trade a setup like this on a 1 hour chart or a 15-minute chart and look for these corrective setups. Or if you're a swing trader, then if you're looking for this kind of setup, then you might not have very many opportunities, because they don't happen all the time. Sometimes they can be quite rare, and then sometimes you get a few of them. But anyway, what I'm trying to get at is you could incorporate a setup like this into your own strategy. You could incorporate it into your own style of trading. You could just trade it on its own and just trade it, or you can take parts of it. Do whatever you like with it. I hope it could be helpful to you. But throughout the process that I'm going to be going through it, I'll try and shed some light on why the strategy works and the kind of philosophy behind it and the actual strategy itself. And hopefully you can pick up some of these concepts around it. But essentially it is a mechanical process, it is a mechanical strategy, so you could very well just trade it on its own using this framework. I'll go into some charts shortly. Hopefully this sheds a bit of light on how it works, and we'll go deeper onto some charts. Anyway, what I'm trying to get at is you could do multiple things with this strategy. You could be incorporating into your own strategy, you could be taking parts of it and using a part of the strategy for what you're doing. You can incorporate it into your discretionary process. Maybe you look at levels, you support and resistance, you look at other patterns as well, and you could use this as an extra complement. Or you could literally trade this mechanically and just trade it on its own. You can do whatever you like with it. I hope it can be helpful. I hope I can shed some light on the actual concept of it and why the strategy works and what the kind of thought process is and how it ties in with liquidity, kind of market psychology. So at the end of the day, markets move on psychology. That is what moves the market. All that market is just a collection of people's thoughts and people's ideas, which are reflected in the price. So whenever we're trading technical analysis, we're trying to trade the psychology of the market, either because technical themes happen over and over again, because they're almost like self-fulfilling, or because fear and greed. They're the things which are moving the market, fear and greed and people's ideas. And then obviously you've got some of the other stuff that comes into it, bank, order flow, algorithms, high frequency traders, etc. But the essential setups have stood the test of time, and we'll go into that. We'll go into why this works and the actual concept of it, and then I hope you can take some value from it along the way.